for sub-Saharan Africa, the IMF has predicted slow growth for the region in its latest global outlook. Growth in most of the continent is projected to rise in 2017 and 2018, but it'll barely return to positive territory in per capita terms this year. In particular, the IMF outlook for South Africa remains grim. The country slipped into recession earlier this year, and the IMF has predicted modest growth for South Africa of 1 to 1.2% over the next year. Now, for the most part, the IMF has kept its global growth forecasts unchanged, as we heard earlier. It put it at 3.5% in 2017 and 3.6% in 2018. However, there are upward revisions for Japan, China, and other Asian emerging markets. The growth forecast for the United States is down to 2.1% this year, based on uncertainty on the nature of fiscal policy changes. Well, let's get more on this. Daniel Ringes now joins us in Washington with an update. Daniel, as always, welcome to the show. Now, it suddenly looks like countries like China and the Eurozone are picking up the slack as the UK and, of course, the US economies expand more slowly. How has much really changed in the IMF's global outlook? Give us the highlights.
Yeah, it's not a major change, but I think for everyone looking at this from afar, it's a picture of a global economy that's doing okay. I mean, 3.5, 3.6% this year and next is not bad. But going into some of the details, as you were saying, in the United States, there's less likelihood that Donald Trump is going to get his wishes on tax cuts and on infrastructure spending to the extent to which he would like, because of all the mired politics over healthcare, Russia and everything else. That means the expectations of the markets and the IMF is that probably it'll be somewhat watered down in order to compromise. That means the sort of stimulative effect of the US economy will be slightly less than it was, but it's certainly no disaster. Still at 2% growth is not bad at all. UK's sort of similar picture, slightly down. And then, as you were saying, places like China, Japan, and then America's closest neighbors, Canada and Mexico, slightly upgraded. I think part of that is that given that Donald Trump wants to renegotiate NAFTA, it doesn't look as though it's going to be as dramatic a worsening impact on those neighboring countries as some people had thought. So what we're looking at here is a little bit of tweaking around the edges, but the overall picture is fairly strong.
Now, the fund also said that in the medium term, risks are tilted to the downside. What exactly are these risks?
Well, one of the sort of not so much medium term, it could be short term, could be medium term, is the valuation of developed market stocks. So people have been buying these things because they've been profitable. Corporate profits have been pretty good, but that's meant the valuations have gone up so much that if there were to be some kind of shock, you might see people retrenching from their stock market purchases, and then you might see a sudden correction of stock market valuations. That could have a sort of reverberating impact on the overall economy as people lost some confidence. But, you know, shocks are not always something that we can predict, so it's something that possibly might happen. It possibly might be dramatic, it possibly might not be. But there are other potential risks. For example, the IMF believes that China may have sort of sacrificed some of its medium to long-term reform process in order to maintain its growth. The growth of China is very good for many emerging market countries and for the global economy, but they are a little worried about the level of credit growth in China and whether the reform process to ensure that that remains stable is in place. And lastly, I think the populist sentiment that's come out of the United States has reaped some concerns about protectionist sentiment and a retrenchment from global trade. That remains a risk, but given what we've seen in Europe of late, it seems it's a lesser risk than people anticipated earlier in the year because some of the more centrist politicians have had ascendancy.
Well, let's look at the continent, Daniel. The IMF's growth outlook for North and Sub-Saharan Africa was quite dim. Why exactly was this?
Well, it's the old story, isn't it, of the fact that commodity prices have not recovered as anticipated, We've continued to have this global glut on the oil price and other commodities. And so that's really had an impact on some of sub-Saharan Africa's biggest nations, including Nigeria and South Africa. Now, the interesting thing about South Africa, they've actually slightly upgraded the growth forecast because of the bumper crop, because of better than expected agricultural conditions. But for 2018, they've revised it down by 0.4%, probably the biggest downward revision of their projected growth for sub-Saharan Africa, or indeed the global economy. And they are citing, quote, political uncertainty and weak consumer and business confidence in South Africa for that. So let's not forget, though, that at least a third of sub-Saharan African countries, particularly commodity importers, are actually doing very well. Places like Rwanda and Cote d'Ivoire, Senegal and others. So there are still some very positive aspects of the sub-Saharan African economy. But lastly, I'd say there is still a level of insecurity, instability and also famine conditions in several countries. And donor countries are not stepping up enough, in the words of the IMF Managing Director Christine Lagarde, in order to help those economies so that that vulnerability remains stark.